Welcome to the introductory video to trade management. This is going to be the first video of a video series where I am going to cover the importance of trade management. Throughout this video series, I'm going to show you plenty of real-life example trades, and I'm going to show you the importance of the management behind it, and why I chose to either scratch a trade, take profits, or maybe take a loss. Now, pretty much all my videos where I cover live trades, I do talk about my managing, but I don't really dive into it on a deeper level. I don't really stress the importance too much. More so I show you the plays, the setups, and just talk about the order flow. So this video series is going to be geared specifically towards trade management, which is the single most important thing you can do to make profits if you're going to be a scalper, especially if you're going to be scalping order flow off the depth of market. So here's the deal. Now, when it comes to trade management, a lot of people have a bad habit, okay? That bad habit is setting hard stops and hard targets. Now, I can tell you one thing in the ES that doesn't work that well. I've come from a technical analysis background. I've tried all sorts of things. Now, I'm not saying technical analysis doesn't work. You know, it does for people, and and if it works for you, that's awesome. Keep doing it. For me, I found order flow on the depth of market. That's the system that works for me, and I scalp. That is the type of trading I enjoy doing. However, when it comes to scalping, taking small profits out of the market, trade management is key. And you don't need a more than 51% win rate to make money. In fact, you can make money on a 20% win rate with good trade management. So you're like, how do you make profits off 20% win rate? Well, pretend you take 10 trades, 2 are losers, 2 are winners, and 6 are break-evens. Okay, you get out at the same price you got in at. Now, out of the 2 losers, you cut both of them at $12.50. So you're down $25. However, your winners were both $50 wins. So you're up $100 minus your $25. So you're up $75 for the day. The rest are break-even trades. And that is because you had good trade management skills. You hear terms like let the winners run and cut the losers. That is exactly what trade management is. And I think that is something not too many people practice often. It is definitely a skill that has to be learned and fine-tuned over time. There is no way in hell you're going to be good at trade management right off the bat, okay? In fact, after a while, your trade management skills will allow you to take even more shots in the market, okay? I don't have to be right all the time. I just have to cut my trades. So, now, I'm not saying with good trade management, you just fucking start swinging for the fences. You don't just start taking blind shots in the market, because no matter how good your trade management skills are, you're going to end up losing. You still have to wait for key setups, okay? You still want to make sure that you're right on the direction of the trade you're making. Now, sometimes you may break even and scratch the trade, and it goes against your original entry. That was a good play. Sometimes you'll scratch the trade and it ends up going in favor of your direction, but the order flow was hesitating and the order flow didn't look that good. That's going to happen, okay? Just be patient and wait for the next setup, because let me tell you, if you're scalping and you're scalping all day, you can make a lot of trades. But you want to make sure you're finding good entry points. Good entry points. Okay, that's a whole nother skill. Learning the setups, learning the good entries, waiting for the entries, that's a whole nother skill set. And after a while, you're going to develop a sixth sense in the market. Okay? The first video after this video, so the second video in the series, the first video on trade management where I show you an actual trade is going to be a trade where I reverse it. So I originally go long, it starts going against me, the order flow doesn't look good, so I take a 1 tick loss and then I reverse the trade for a $50 win. And I do it pretty quickly because of what the order flow is telling me. So after a while with your management skills, you'll be able to get quicker on making decisions in the market, and eventually you'll be able to get out of a trade to get back into a trade. Okay? That's part of really good management skills. There's plenty of opportunity out there. You just can't hesitate. However, once you're starting to take shots, you've got to be on top of that management. And then maybe it didn't work out, but it comes back to your price again. Now this time the order flow may be confirming that it could work out, so you take the shot again. All right, maybe you suffer a little bit of loss or you just keep scratching it, but you take the trade, and if you know you're going to get more out of it than what you originally lost, or more out of it than a scratch, go for it. Now, trade management doesn't necessarily have any hard rules per se. I try not to go past a 2-tick loss. Sometimes the market will rip past me so hard and so fast that I just have to take more of a loss. But for the most part, I try to get out at exactly 2. So you may be thinking, you know, why wouldn't you just put a stop at 2? Well, there's a reason for that. Pretend like we got in right here at this 28, 72, 25 level, okay? And we go long. So we got in right here. The market ticks down 1, 2, okay? Now, as soon as it ticks down 2, if I had a stop order there, as soon as it touches this price, it's going to automatically market order me out. Okay? That's what stop orders are. They're market orders. Now, I'm going to wait. I'm going to wait with my finger on the trigger, and I want the order flow to confirm that it's time to take the loss on 2 ticks. Sometimes the trade will go against me 2 ticks, and then it'll reverse back into my favor, and I might be able to scratch for a break even, or I may even be able to take profits. But the thing is, theoretically, if you have a stop order 2 ticks down, really it's only good for, it's a stop order for 1 tick. Now you may be thinking, why wouldn't you put it 3 down? Well, I don't want to lose 3 fucking ticks. The best thing to do is manage your losses. So for instance, we got in here at this 28, 72, 25. It comes down 2 ticks. Well, it's 211 versus 57. I'm going to get the fuck out. I'll click this red box right here, which market orders me out. All right? However, if pretend we got into this 28, 71, 50 right here, and then it ticks down 2. Now, pretend we have this 842 here, and there's nothing there, but we'll go ahead and put something there. So give me just a moment while I do this, please. All right, pretend it's 842 versus 250 here. I got in at 28.71.50. Now it ticks down 1, 2. All right. And now I'm trying to manage myself. If this was a stop order 2 ticks below, it would automatically market order me out. But the thing is, I'm not getting, I mean, that's bad. That's not good. Because what do you see? You see 842 on the bid versus 250 on the ask. Well, first and foremost, 842 is a lot. 842 is a lot of orders. So if that's real, that's a great defensive position, and that's essentially a support zone. That's a wall. It's going to be very difficult for this price to trade. And if it's that big, it's probably going to bounce back to where I can scratch out. So if there was a stop order 2 ticks down below, it would just bump me out. The thing is, I want to manually manage this because I'm seeing 842 versus 250. The trade is still in my favor, even though I'm taking a potential 2 tick loss here. So I'm going to wait. If this 250 pumps up to, say, 500, and then this over here starts to pull down to, say, 200, then I'll get out at a 2 tick loss. So it really depends on the order flow, what the bid and ask are telling me. It's all about the numbers. That's why you don't put in a hard stop at 2 ticks down. Now, when you're good at trade management, I definitely recommend putting an emergency stop in, only in case the internet goes down. How far you put it down, that's totally up to you. But the thing is, if you're new to this and you're going to practice on a good quality simulator, that has a system that makes you wait in the queue on limit orders. TradeStation doesn't have that, and when I was new, that totally gave me a false idea of how the fucking markets worked. Good quality simulator. I use Jigsaw Trading Depth of Market. They have a good quality simulator. I switch back to the good quality simulator to test new strategies. So if you're going to sim trade and practice trade management, you need to don't put in a hard stop. Do not put in a hard stop because you will be inclined to let the market run to that stop, okay? You will no longer be managing the trade. And one thing traders have a problem with is letting losers run and cutting winners. That is the very opposite of what you need to do to be successful, okay? Cut the losers, let the traders, the winners win, let them run. Let them run. So that's the importance of that. Now, as far as setting targets to get out, I do not set hard targets to get out. Why do I not set hard targets? Because I get out based off the order flow. All right? If you're scalping the ES, you need to be an order flow trader. You need to learn how to order flow. You need to know trade management. Trade management is what keeps me profitable. I can tell you that. And you're not going to get good at it unless you practice it. And when you practice it, you're going to fucking suck at it, but you have to keep doing it. So when would I put in a profit target? Well, pretend the market's been trading down. All of a sudden, I see this 842. I know that is a large order, and it's going to be very hard for the market to get through there. So I'm going to front run it. I'll put a limit order, and if you watch my other videos, you'll see me doing this quite often. I'm going to put a limit order right here for my target. Now, sometimes it'll struggle getting to my target, so I'll go ahead and get out at the next price above. Okay, you may see that in some of my videos or videos to come. So it all really depends on the order flow. When to break even, when to take a loss, or when to take profits. Now, theoretically, I want to take break-even trades. If I can't get that, then I'll take a 1-tick loss. If I cannot get that, then at most a 2-tick loss. Sometimes it doesn't work out that way, but if you're quick enough, It's all right. You just have to do that. And one issue I have is once it gets 2 ticks against me, sometimes I get a bad habit of letting it, play out. I'm like, you know what? Hopefully it'll come back and I can scratch. And then it comes back and I'm like, fuck it, I'll stay in. Maybe I can get profits. And then it never does. And then it goes against me 4 ticks. And I'm like, shit, I had the opportunity to break even, and now I didn't. So screwing up like that is good in the sense that it's experience and it'll teach you not to do that anymore. So I do once in a while get a wild hair up my ass where I don't fucking cut the trade. Now I can tell you this, I take a lot of break-even trades. For instance, yesterday I had 14 winners and 10 break-evens, and I made $225 for the day. So that's a lot of shots, okay? And those 10 break-evens could have easily been losers, all right? When you get in the trade, you want to make sure that it's going to go in your favor right away, okay? And if it's not, then you're going to want to get the fuck out, all right? You want to make sure the trade will go into the profits for you as soon as possible, okay? The longer you're sitting in a trade, the worse it's looking for you. So there's a time and a place when you should sit in a trade a little bit longer than others, but it really depends on the context of the market and what the order flow is telling you. And it's very difficult to explain. It's something you would just have to see and gain through experience. But for the most part, I have an internal clock. And the longer I'm sitting in a trade and it's not working out in my favor, I'm going to break even or try to take a 1-tick win. Now, I don't recommend taking 1-tick wins. Don't go for 1-tick wins. You want at least 2 because potentially risking 1 or even 2 to gain 1 is not going to help, okay? You want to risk at least 1 to make 2. Okay, you want to have the odds in your favor like a casino. So just keep that in mind. When I take a 1-tick win, that's me not having faith in the market, and that's sort of like a break even, except for at least I got something out of it. So those do happen. Maybe I get in the trade and it keeps trading back and forth, and it's not going anywhere, and then all of a sudden it clicks down, clicks up, and it goes against me 1 tick and it comes back up. Well, when it comes back up, I can market order out free and clear and just get the fuck out of it. It's you're going to develop a sixth sense where I don't like how this feels, I'm going to get out. That is something that's good. You'll feel good about good trades. The longer you do this, the more skill you build, the more you manage your trades, the more you'll have that feeling that this is going to be a good trade. You'll know when it's a good trade and when it's not. Sometimes you'll tell yourself to get out, but you don't click the mouse, and then it just turns into a loser, but you knew you should have got out. That is something you're going to have to identify, write it down, do whatever you have to do to target that weakness, and then work on it. So when you tell yourself, I should be out of this, and you can scratch it, but you're not clicking the mouse, and all of a sudden it goes against you, you need to work on that, okay? Sometimes I'll say, does this trade make sense? No, it doesn't. I'm getting out. I don't like the way the price action is. I'll get out. I don't like the way the order flow is. I'll get out. The ask is getting bigger and my bid's falling away. I'm going to have to get out of this. So when you're really good at trade management, you can take a lot more shots. And the more shots you take, the more likely you're going to make more money. And that's why we're doing this, right? To make a lot of money. So like I said yesterday, I had 10 break-evens and 14 wins. And I had 3 losers, only in case you were wondering. Well, 225 for the day. That's pretty good. But again, 14 versus 10. I took 10 shots. I actually took 13 shots, okay? Let's pretend the break-evens are losers. Really, they don't count for us or against us. But there were 13 out of 13 shots I took that didn't fucking work out. 14 shots I took that worked out. So I had a little bit above a 50% win rate for yesterday, okay? But I came out on top. So I took a lot of shots, and almost half of them didn't work out for me. But because of my quick trade managing skills, I was able to scratch at least 10 and only get 3 losers out of it, whereas I got 14 winners. So that's a perfect example of letting the winners run and cutting the losers. And break-evens are fucking fantastic. I like break-even trades because they don't count for you or against you. They're a win in my book, okay? So that's an example of how really good, tight trade management can help you make money. You don't have to be right all the time, okay? You just have to cut that shit off. And that's just part of the game. And that's how, that is one thing I can tell you that has helped me succeed and helped me make money in the markets. Trade management. This is the number one important thing you're going to have to work on, practice, and get good at. And when you're putting in hard targets, you're not getting any better. So I'm going to probably cut the video off right here. That pretty much covers everything to what this playlist, this is going to offer, this educational material. And this is a YouTube playlist, just to let you know. So what you're going to want to do is you're going to want to go through these as I add them, and we're going to dissect trade management. We're going to talk more so about trade management. We're going to show some losers. I'm going to show some break-evens, and I'll even show you some winners. And we're going to specifically drill into your head trade management, what I'm feeling in the trade, why I'm feeling this way, what the order flow is telling me. And theoretically, all my videos, I do talk about trade management, but I don't drill it into your head. So if you're watching other videos on trading strategies, trading the volume profile, breakout trades, just keep in mind the trade management with those trades, okay? So this is the number one important thing you can learn to have an edge in the market. And this is not an overnight skill you're going to have, okay? It takes a lot of practice. It's going to take a lot of failure. But scalping futures is a very rewarding game. However, it's a skill-based game. You're essentially training to be an athlete in the markets, okay? And if you don't think this is for you, if you don't think you can do this, then, I mean, scalping, you're not going to be successful. And we all have to start out somewhere. And I just want you to understand how fucking important trade management is. So without further ado, I'm going to cut it off here. And then I'm going to have some trade management videos. The first one, the one after this, it's going to be a reversal trade. It's very rare that I capture these and get a good one to where I can show it to you and explain to you what's happening. So look out for that one. It's going to be really awesome video. You're going to like it. And just the strategy alone is worth taking a look at it because it is sort of a volume profile strategy with size involved. It's just the play, the way it worked out. It's something I don't see that often. So just from a pure technical aspect, you're going to want to check it out.